Today's podcast is about the Kenya Airways results. I attended the investor briefing this morning. I had to get up quite early and get there in Crown Plaza in Upper Hill. And I just thought, let's just take the opportunity to have a look at this because it's key, central to the national interest. You can't call yourself a hub if you don't have an airline. It's had a torrid few years. And people have analysed that endlessly. There was a lot of optimism ahead of these results. I got there early, and the one other person, of course, who was there was Michael Joseph, who's the chairman. His arm was in a sling, and when I turned to him and said, "What happened?" he said, "Mbuvi mugged me," in jest, of course. Look, they reported a 61.095% improvement in their full year loss after tax. Revenue was down 8.507% to 106.277 billion shillings. That was obviously on the reduction in the number of aircraft that they fly. Operating costs were down 12.637%. They actually made a headline operating profit of 897 million shillings versus a loss of 4.093 billion last time. That's a pretty big swing and turnaround. Operating margin was 0.84% versus minus 3.52% the previous year. Other costs came down substantially, down 49.564% to 11.09 billion. Therefore, the loss before income tax was 10.20 billion versus 26.09 billion the previous time. Full year loss after tax was 10.20 billion versus a loss of 26.225 billion. So a 61% improvement. Loss per share 6 shillings and 82 cents versus 17 shillings and 53 cents loss the previous year. Cash and cash equivalents actually at the end of the year improved substantially to 9.177 billion shillings versus 4.827 billion previously. Recorded an operating profit, they said. Passenger numbers grew 5.4% to 4.46 million, which is interesting and speaks to a more optimal aircraft network usage. Cabin factor, exactly that, up 400 basis points to 72.3%. Yield was down 7.4%, driven by market capacity pressure, fuel and currency. Fleet costs were lower by 47.5%. This was due to fleet rationalization. Overheads, however, went up by 8.7%, mainly due to one-off impact of restructuring costs. Finance costs increased 4.1%. FX losses, whilst they decreased 62.4%, were still $41 million. These are the complexities around managing an airline in countries like Nigeria, Angola, Sudan. Spoke to Nigeria improving the FX position, but Angola and Sudan still remaining a big challenge. They had fuel derivative gains of 312 million shillings versus a loss of 4.2 billion in the previous year. Michael said we are starting to see more than just light at the end of the tunnel. He also said we're getting to the end of our capital restructuring exercise, and he's put a sort of time limit of that on 2 months. Mbuvi, the outgoing CEO, the turnaround is truly embedded. A lot of people had buried KQ 2 years ago. We are winning today. Winning in Africa is key for us. Intra-African traffic was up 13%. The African network remains the jewel in their crown. We are moving up, said Mbuvi. We know how to do business in Africa. 60% of our revenues are from Africa. Share price has rallied about 5% on this news, and it's a meaningful improvement and surely an earnings inflection point. Capital restructuring is now about 2 months away, and that will be dilutive. But this marks a sharply improved story and a long-awaited rebound and turnaround. So well done to KQ for that.